give a quick overview, and then we will also cover the taxability criterion for each one of them. Yeah.
Yeah. So like Nishad mentioned, we will cover three main types of accounts that could be opened by a non-resident in an Indian bank. So there is an NRE, FCNRB, and an NRO account. NRE is a non-resident external, FCNR is foreign currency non-resident account, and NRO is a non-resident ordinary account. There are also other types of accounts. One of them you may have heard of is an SNRR account or an RFC account, but those accounts are for specific purposes or not for non-residents. Resident foreign account, as it says, it is for a resident who is wants to keep money in foreign currency. Now, let's look at these three types of accounts and what are the specific points that you need to look at. So FCNRB account cannot be opened by cooperative banks. So you could have an NRE or NRO account with a cooperative bank, but FCNR account is not allowed. Why it is not allowed? Because cooperative banks do not have the power to trade in foreign exchange. So they cannot obviously open a foreign currency account, that is FCNR account. Also, foreign currency non-resident, so FCNR, as it says, it could be any foreign currency which is freely convertible, while NRO and NRE accounts are in Indian rupees. You may also see here that NRE and NRO accounts could either be savings account, they could be current account, they could be fixed deposit, recurring deposits, but FCNR is a term deposit only and it has a specific life. So it could be from 1 to 5 years only. For repatriation purposes, the funds in NRE and FCNR are basically considered to be outside India. So they are easily repatriable. However, NRO account is the route for all your non-repat investments. So whatever non-repat investments you do, those would be from your NRO accounts. So government has a strict restriction on remitting funds outside of the NRO. So if you want to remit funds, then you have to prove that tax has been paid on the income or that income is was from a repatriable investment. So from NRO, only current income is basically allowed to be remitted outside India. For all other funds, like apart from your income, you will need a documentation, and most of the times bank would ask for a CA certification, popularly known as Form 15 CACB, to transfer your funds from your NRO to your NRE or from your NRO to a foreign account of yourself. So that is a compliance part. Now, yeah. So let's look at taxation of the interest for the non-residents. As you see here, NRE account has a specific provision that is linked to FEMA. So if you are a person resident outside India, that is a non-resident under FEMA, then your NRE interest income is not taxed in India. However, if you become a resident under FEMA, then your NRE interest income is taxable in India. Income from FCNR account of a non-resident. Here non-resident is under the Income Tax Act and not under FEMA. So FCNR account interest of a non-resident or of a person who is not ordinary resident, that is also exempt from tax in India. Basically, foreign currency interest is exempt if you are a non-resident or not an ordinary resident. However, you will still be required to pay taxes in your home country. So though this interest is not taxed in India, either from your NRE account or from your FCNR account, you will be still liable to pay taxes in your home country, subject that your home country follows a global system of taxation for residents. Now, interest from your NRO account or interest from your FCNRB account to a resident Indian, so an ordinary resident, is taxable. For NRO account, anybody, whether you are a resident or non-resident, doesn't matter. Interest is taxable in India. For FCNR, it is only taxable if you are an ordinary resident.
Just one point on the taxability of NRE accounts, and we have seen a lot of sort of NRI queries coming to us saying that they would want to invest, like put deposits in NRE accounts because it is not taxable in India. While that is true, as Jaydeep mentioned, unless you are living in a tax-free country, you will be we will have to pay the tax in that country of residence. So do be mindful of that while you are calculating your FD returns, etc. as well. Just as a quick stat, there is $140 billion of NRE deposits in India currently. And I'm sure a lot of it is there because people are also thinking that they will not get taxed, but they owe tax liabilities in the resident country. So please be aware when you sort of take these financial decisions. Thanks.